Out there on the internet, there's a lot of electrons devoted to discussing whole life insurance, both positive but mainly negative. In this video, we're going to be discussing shocking costs of not buying whole life insurance. Here are 6 costs that you may not have considered about buying a whole life insurance policy. The first 2, well, they may not surprise you, but stick around for 5 and 6 because they probably will. Number 1, not creating an estate. One of the benefits of a whole life insurance policy is that you're instantly able to create an estate and know exactly how much money you're going to leave to your family and your loved ones. You don't have to discount it for taxes, and you don't have to wait for the capital to accumulate. Long and the short of it, you're creating that bundle of money for your family with the stroke of a pen. Number 2, you may not be able to buy life insurance later on. Depending on the studies you look at, up to 50% of Canadians under the age of 65 will probably come down with some type of a health condition that prevents them from buying life insurance. That can include anything from heart attacks, strokes, cancer, or in my family's case, amputations. Number 3, relating to the cost of buying it, it goes up every year as you age. Now, this shouldn't be shocking to you, as well, when you look at it from the insurance company's perspective, they assume that you're going to live to about age 85, and they'll have to pay out a lump sum of money then. They take your premiums and grow it so they have enough money to pay your beneficiaries at that time. A 65-year-old who only has about 20 years to pay premiums before the death benefit gets paid out has to contribute 4 times more than a 45-year-old who has 40 years to contribute. Now, we normally see this in reverse when our big banks and investment companies use similar numbers to encourage you to save for retirement sooner. Number 4, speaking of savings, a properly designed life insurance policy is the most efficient way to save. It's not an investment because investments have an element of risk. It's a savings plan. When we compare it to other savings vehicles like GICs or high interest savings accounts, whole life insurance outperforms them tremendously. This is because over the last 20 years, the average 5-year GIC has only averaged 2.12% return. A whole life insurance policy, the annual dividend scale has averaged over 7% annually over the last 20 years. Plus, with a GIC or a high interest savings account, you got to pay taxes on that growth while it grows more tax efficiently within a life insurance policy. Number 5, on the topic of savings, a life insurance policy incorporates tax-free compound interest. Albert Einstein is quoted by saying that compound interest is the 8th wonder of the world. He who understands it, earns it, and he who doesn't, pays it. Within a life insurance policy, every year, both the cash value as well as the estate benefit grows like compound interest. In traditional savings vehicles, do also grow with compound interest, but if you need the money for some type of an emergency or an opportunity arises, what happens? You got to take the money out and the compound interest stops. Within a life insurance policy, you have a contractual right to get a policy loan. So you can use your money while the money continues to grow in the policy, compounding, just like Einstein says, those who understand it, earn it. I'd really appreciate if you would click like and subscribe to the channel because that helps the algorithm promote our videos and get this message out to more Canadians. Number 6, it's another way to diversify your portfolio. Our banks and traditional financial planning teach us to diversify our portfolio. Diversified stock portfolio, diversify between stocks and bonds, precious metals, diversify into real estate. A whole life policy is another asset class / savings vehicle that is not correlated to any other of these vehicles. It doesn't follow the bond market. It grows independently. And there's no risk of loss. It's contractually guaranteed to grow over time. It can never go down in value. If you'd like more information on whole life insurance policies and how to make them work for you, go to the contact page at the IBCanada.ca website and leave us your contact details, and one of us near you will reach out, discuss how a properly designed whole life insurance policy will benefit you. My name is Michael Hunter. I'm a certified financial planner and infinite banking practitioner in Ontario.